Welcome back to our 2025 tax planning series. If you are self-employed, run a single member LLC or own a small S-Corp, this video is for you. This is one of the most important prep weeks of your entire tax season. By the end of this video, you will know exactly how to get your book clean, your deduction documented, and your 2025 business return ready to file smoothly under the new Big Beautiful Tax Bill, officially known as the One Big Beautiful Bill Act. We will break this video into 5 parts so you can follow along step by step. So part 1, bookkeeping and reconciliation. Part 2, income and expense organization. Part 3, documentation and deduction. Part 4, year-end tax move and retirement contribution. Part 5, the final CPA ready checklist. So let's dive right in. Let's look at part 1, bookkeeping and reconciliation. So before we talk about deduction or tax strategies, your number must be accurate. Remember, garbage in, garbage out. That means reconciling every bank and credit card account through December 31st. Every deposit and expense must tie to your statement. If you use QuickBooks, make sure each month shows a zero difference in reconciliation. If you track manually, total your income and expenses in Excel or Google Sheet and verify they match your bank total. Think of this as your financial foundation. If your books are off by even a few $100s, your tax liability can easily shift by thousands, especially for high income business earning 6-figure or 7 figures. So let's move on to part 2. So once your books are accurate, you want to separate your income sources. So for most Schedule C filers, that client payment, sale, or service income. If you receive 1099 next, make sure the total match what in your books. So if there's a mismatch, you want to contact the payer immediately. For S-Corp owner, confirm that income from your P&L matches your invoices and deposits, not just your bank balance. So the step prevents IRS notices and ensure your income reporting is bulletproof. Now let's organize your expenses. So the most common deductible category include advertising and marketing, supplies and software subscriptions, travel and meal, which is generally about 50% deductible, vehicle expenses or standard mileage, home office allocation, professional fees, accounting, legal or consulting, wages or contract labor, insurance and license, utility and internet. If you haven't updated your expense tracker since the holidays, this is your moment. Go through each purchase and mark whether it's business or personal. Keep digital receipts. The IRS accepts electronic records, so have PDFs or screenshots directly to each transaction in QuickBooks or Excel. Now let's look into part 3 and dig deeper into the deduction that make the biggest difference. So vehicle expenses are one of the most audited areas, so make sure yours are documented correctly. For 2025, the standard deduction rate is 70 cents per mile. Every 1,000 business mile equals 700 deductions. So if you choose the actual expense method, you will need to record gas, insurance, repairs, lease payment, and depreciation. If you own your vehicle, remember this rule. You must use the standard mileage method in the first year. The vehicle is placed in service to keep the option open later. If you lease, you must use the same method for the entire lease. Always keep the mileage log that includes the date, destination, and business purpose. Next is home office deduction. If you use part of your home exclusively and regularly for business, you can deduct a portion of rent, mortgage interest, property tax, and utilities. Measure your office space, divide by the total square footage of your home, and apply that percentage to your home expenses. Or use the simplified method, which is $5 per square foot up to $300 square foot. So that means if your square footage of your home office is bigger than 300 square foot, the max you can deduct is up to 300. So 300 square foot times $5, that's 1,500 max. You can deduct under the simplified method. You want to keep photos and a short written description of your workspace to support the exclusive use requirement. If you operate as an S-Corp, remember your home office expenses are usually reimbursed to an accountable plan, not deducted personally. Now let's highlight a few new opportunities under the Big Beautiful Tax Bill. So beginning in 2025, the 20% qualified business income deduction, Section 1998, is now made permanent and indexed for inflation. So if you are a Schedule C filer or an S-Corp owner with pass-through income, you want to maintain accurate books and documented expenses, ensure you can maximize this deduction. And here is another big one. So Section 179 expensing limits are now increased by 2.5 into 2.5 million, which phased out begin at 4 million. That means high-income business owners can expend even more equipment, computers, and furniture purchases in the year of acquisition. Let's move on to the next part 4, your year-end tax move and retirement contribution. This is where your tax planning power really shows. Start with retirement contribution, one of the most effective ways to reduce taxable income. You can still open and fund a SEP IRA or a solo 401k for 2025 up to the due date of your return, including extension. If you haven't opened one, contact your financial institution now so the plan is ready when filing season. So solo 401k employee deferral must be elected by December 31st, but employer contribution can be made until your your filing deadline. So high income earner to the contribution can easily shelter 10 or thousands of dollars from current taxation. Next, verify your estimated tax payment. You want to record each quarterly payment, so April 15, June 15, September 15, and January 15 with the exact date and confirmation number. So this ensures your CPA credit everything correctly. Missing even one entry could result in unexpected balance due or a delayed refund. If you own an S-Corp, add 2 critical tasks before closing the year. First, confirm your officer's salary's reasonable compensation must be paid through payroll before December 31st. Second, finalize your accountable plan. Reimbursement for mileage, home office, and cell phone expenses. So these reimbursements must be completed by year end to count. Attach your reimbursement log and proof of payment to your corporate book. In part 5, we're gonna talk about the CPA ready checklist for you. So this is the part that makes tax filing smooth and stress-free. You want to create digital folder label income. So income is like 1099 sale report statement, and then label expense like receipt, and then log, reimbursement. 3, assets, and the equipment vehicle depreciation schedule. Another section is bank and credit card statement. Another section is tax form like prior return and depreciation schedule. So name your files clearly, for example, like laptop purchase June 2025, 1,200. So the easier you make it for your CPA to trace each number, the faster your return gets filed, and the more deduction you can safely keep. Before sending your package, run through the checklist. Bank account reconciled through December 31st, or income reporting and 1099 match. Expense category review and documented. Mileage log complete. Home office log complete. Quarterly estimated payments recorded. Retirement plan contribution plan. S-Corp payroll and reimbursement finalized. File organized for your preparer. And I think you are pretty ready for the next example. So a consultant earning 180K read her book through QuickBooks, reconciled every account, and exported her P&L. So she had 38K in deductible expenses, drove 6,000 business miles, and contributed 10K to her SEP IRA. Her CPA filed in early March, and she saved about 11 grand in taxes compared to last year, all because she followed the exact process. So here is the takeaway. Clean books are non-negotiable. Receipt equal protection and organization equal bigger savings. If you follow this 5-part checklist, your 25 return will be accurate, audit ready, and positioned to take full advantage of the new beautiful tax bill provisions. Next week, we will move into the business filing calendar. Everything partnership and S-Corp need to complete by March 15, plus how to prepare your extension safely if you're not ready by that date. So stay tuned. That one is a much one for business owners. Take care, and I will see you at the next video.